Hi there, it's Monday the 15th of October 2018. This is my diary of a small cap investor. I think day three, and looking at the markets here, there's a stumbling block over the weekend, Brexit. It's going to happen, isn't it, I think it's got to go to the wire, and it's like any kind of bargaining tool. When you go abroad and you go to some markets, you've got to walk away. You've got to be prepared to walk away. You do a bit of haggling, and you've got to be prepared to walk away. And then the guy comes out, hey, come back, come back, come back, come back. That's what's going to happen. I did vote for Brexit. I mean, it's hassle. I know it is hassle now, but I just think I'm not a big fan of protectionist blocks like the European Union. You're paid to be inside it. They charge everyone else. In an ideal world, it'll be free trade, and you would buy and sell goods on your competitiveness, how good your goods were. Let business do business. Keep politics out of it. Let business do business. That's what I think. But I think it'll go to the wire. It'll have to go to the wire, and we have to be prepared to walk away. And as simple as that, before they take us seriously. Anyway. Oh, by the way, Meghan and Prince Harry, pregnant. Oh, no, they're not both pregnant, just the one, of course. It'd be a bit odd if they were both pregnant. But I'm trying to work back. So how many months ago did they get married? In July? So July, August, September, October. It's got to be more than 3 months. She has, hasn't she? Be safe. Oh, so she was walking down the aisle. Yes. Anyway, let's talk about stocks. Okay. So, as far as the news is concerned on my stocks today, Cora Gold I've held for a long time. Very disappointing share price. I like the company. The story hasn't changed for the long term. I'm still in there. I'm down. It's one of my worst performing stocks at the moment. But they've come up with news that Cora, their lead sort of asset resource, it can be a standalone mine with upwards of 1 million ounces of gold, and we sort of knew this beforehand. The thing that took the share price down was they had a second sort of target called Tekleduku in Mali, which they're looking at, and their first set of assay drill results came out fantastic. Really surpassed. Could be a massive resource, and then the second set of assay results that came out, drilling results, weren't as good. And the share price took a bit of a knock, and I think people may have thought that was their lead, their lead program, but it wasn't. So Cora has always been their lead program, and now it's up today about 8%. But you've got to look at the blog on this on Cora Gold. I mean, because I've done a blog and a video. Some serious money behind this small company. It's 5 million market cap, all right. And there's two kind of people. First of all, Hummingbird Resources own about 34%, just shy of 34% of Cora Gold. They are a gold producer in Mali. They've taken exploration to a mine. They've done all that stuff. Now, also behind or shareholders and behind the company is a guy called Lord Farmer, owns about 12% of Cora Gold. Lord Farmer, he owned Red Kite. It's a copper. He's called Dr. Copper, or Mr. Copper he's called. And his company was responsible for trading around about 10 to 20% of copper to China. His net worth is about 150 million. Why is he involved in a small cap company like Cora? So he's involved. He had the stake as well, not long back. So Lord Michael Farmer is, and also the Quirk family. Paul Quirk is on the board of Cora. Now the Quirk family, pretty much billionaires. They sold Lion Ore, which they sold that back in I think 2007. They sold Lion Ore for $6 billion. They were the major shareholders in Lion Ore. Now this is all stuff in Africa. And if you look at the rest of the board, they've all dealt in Africa and done and produced mines in Africa. So they're very well connected, have very deep pockets. And that's one of the things I liked. That they've got the assets there. The assets are very good. There's about 15 targets they have, Cora. Massive amount of targets. But Cora is their lead sort of thing. So worth looking at, because when you've got assets like that and you've got backing from people not only have money, but have made money in the industry that this Cora is now in Africa, exploring, taking to a miner. I genuinely believe this company will be, up with Hummingbird in a couple of years' time, sort of triple-digit market cap. Do your own research. At the moment, the share price is taking a bit of a knock, and I'm about, I think, 25% down, something like that. But I still believe in it long-term, and who knows, where gold, it's always good to have some gold in the portfolio. So just going through some of the comments from my last video. Play Thrive. You did a couple of messages on my last video, didn't understand, but the one you said, legend, thank you very much. Andy Barton, how do you recover if you buy in too high? I know. Listen, Andy, if you look at my lesson 4, I think it is, how to get a good price on shares. It's the most important thing. Price is everything. And so hopefully, I mean, it's the hardest part. Entering a share initially is the hardest part. You have to value it right. If you get it right at the start, the selling is right. Or if you get it right, if you get the buy right, the sell can be right. If you get it wrong at the start, the sell can be right. You're going to lose money. So you've got to make sure. That's why you must never rush into stock buy. I've done it so many times. Fear of missing out. So you've got to basically, value a company and then scale in, just in case you have got it wrong. You've got to be prepared to buy a stock and say, this is going down. It may go down, because that's stock market fluctuations. You can't, you can't control that. Like I said, you can't control the price of a company. All you can control is your exposure to that company. So I would say, take your time over valuing a company. Try your best to value it. Look at peers. If they're like starting to produce oil, or they're about to produce oil, is an oil and gas company, look at how many barrels they're producing. For example, let's say you've got a company saying they're going to produce 100 barrels a day, okay? And the market cap is 10 million. And they say they're going to produce 100 barrels a day. And you go, okay, and what's the margin on that barrels of oil? How much profit are they making per barrel? And so, to me, I start off with $10, and I just put $10 on it because it's easy to do. So, 100 barrels a day times by 10 is about $1,000 a day. Times that by 365 days a year, or to be conservative, I always times it by 300. So that's what's that? 300,000 a year. So that's profit. All right. So you put it on times 10, and that's your market cap. That's sort of profit of a multiple of 10, and that's you can value the company at 3 million. So that, and then if you want to, up the margin to $20, it can be double that, of course, or double the production. You double it. So try and get a calculator and just do some rough maths and see where the company should be valued. Then, check if it's been funded or not, or if it needs funds. I've gone through some of these in my lessons, but if it hasn't, if you jump in before a company, a pre-revenue company, needs to raise money, you've jumped in the wrong time. One of the best times to jump in is after a fundraise, because the share price comes down, they've got cash. There will be some churn, some people selling stock, but that's one of the best times to get in. So, Andy, in all sort of in answer to your question, how do you recover in if you buy too high? You should scale in. Hopefully you have, but without overexposing yourself. Like I say, in lesson number 1 on my other videos, I talk about risk and exposure. So if you have, then hopefully, if the story hasn't changed and there's value creation going to be happening in the future through milestones, then hopefully the share price will come back to recover. But if you haven't overexposed, then you could scale in on news. Razor 72144. If and when you have time, can you do another off-topic video, please, covering all basics from holding RNSs, TR1s, net present value, rights issue, etc., anything in between? Yeah, I'll do some on that. Yeah, no problem. I did cover sort of TR1s in another lesson, shareholder lesson. Bradley, brilliant video. Apart from a rainy season jurisdiction, anything else we need to know about BZT? That's Bezant. Keep up the good work. Thanks, Bradley. BZT. I mean, it's in Philippines. There are about 30 listed companies in the Philippines, on the Philippine Stock Exchange, who mine in the Philippines. So even though President Duarte, is down on sort of unenvironmentally friendly mines, mining is going on profitably, very well there. And I think ideal scenario, one of these mining companies probably take out Bezant or do a JV. That's the ideal scenario. I like it because it's in copper. If it wasn't in copper, I wouldn't probably be invested here at BZT. I am down in this company. But to put in context, they are valued at 3.4 million, right? Bezant. They have 811,000 tons of copper contained copper. So the copper, is valued in the ground at BZT. I've done a bit of calculations here at £4.19. £4.19 a ton. That's how much the copper is valued in the ground at the moment. If you look at the market cap, and they've got other projects as well, and they've got gold there as well. Now, copper, to sell copper, is £3,000 a ton. It's £4.19 in the ground. Okay. So they've got 811,000 tons of copper in the ground, which should be worth about 5 billion. Of course, it costs money to get it out because it's not going to be worth 5 billion. It'll be less than that because it costs money to get out. And they've also got 2.2 million ounces of gold, which is around about 2.6 billion. Okay, there's dollars. Now to figure out, okay, take all the costs out. How does that work out? You've got all that, gold or copper in the ground, but the costs of mining, everything is. This is when they come up with a net present value or an NPV. This is why they do it. It's almost like it's the value of all that metal in the ground minus all the costs, pretty much an NPV. Now the NPV of Bezant Resources is $793 million, which is 177 times the current value of the company. Yes, it's got risks. Yes, it's, Philippines, but I genuinely think copper is going to be the hot commodity next 10, 15 years. And that there's a copper in a crunch going on where they think grades are going down. They can't get enough copper coming online. So the copper price will go up. And I think inherently the value of that project will go up. So that's what I'm thinking if it's not taken out. And it nearly was taken out in 2014. Goldcrest, I think it was, put an offer of $70 million onto it. And like I said, that was before copper was really in favour. Mike Walt, hi Justin, I'm loving the new blogs and discussion groups. Thanks for pulling this together. Thank you, Mike. Tiny Aim, hi Justin, love the podcast and these short video YouTube diaries. Your view on shorting spread betting is interesting, and your view that is high risk. With proper risk management, it is no riskier than trading in the stock itself, and in fact can actually work for you. I have a great mentor, and spread betting is working for me. Early days brackets. You're right, Tiny Aim. You've got to. The key is right there. You've got to know it's high risk. You're proper risk management, and that's why lesson number 1 in my videos is about risk. Yes, no. I mean, you've got to, as long as you've got your risk in there, and you can't overexpose yourself, it's fine. But I started off messing around with trading about 10 years ago, spread betting. And I was doing quite well. And in fact, I got carried away. I didn't have a mentor, and I should have taken lessons on it from somebody who knew this stuff. And I got caught up in the Fat Finger event, I think 2009, where the NASDAQ shot down like several thousand points within minutes. And I lost a lot of money. Well, for me at the time, it was a lot of money, So that really put me off. And I lost more money than I had actually in the account. So it was a bit scary. And they've changed it a bit now. Did I lose more than was in the account? I lost too much, put it that way. And so it's always put me off. And now I like to know that if I lose on a stock, the maximum I can lose is 100%, no more than that. M. Paxario, or Saro. Awesome, Justin. Please make these daily thoughts a regular feature along with other videos. A real highlight of the day for me and really useful. All the best. Kim, thanks, Justin. Great to hear your views on the markets again. Appreciate the honesty. I'm holding Jan and have not sold, currently down 40%. I know, it's annoying. Interested to know when you would sell a share like this. Is it only on the story, or would you consider cutting your losses, say 50% to 75%? Again, what I did say earlier on to Andy about this is why it's so important, getting the buy price right, the valuation right. I've got a blog coming out on Jan very soon. I'm going to do a video on it as well, and I'm encouraged by what I've researched, what I found out. But yeah, I just think for now, it's undervalued, compared to where it could be, and the value generation that's going to be created. The biggest issue Jan had, why the share price is where it is now, is the delay in the funding. They came to the market with, I think, 2 million or 2 point something million. It wasn't enough to set them up for the entire year. People knew they needed funding, and they delayed and delayed and delayed. And then that comment about I wouldn't do a fundraise below 5 pence, the chairman said, wasn't good because people thought he's never going to do that, and it just kept going down. So it will bounce back. The sentiment is very low, but once the churn is out, once the people have flipped, the warrant holders have flipped stock, I think it will start to re-rate, because essentially there's loads of value there and there's loads of potential upside there. And like I said, sentiment is low, but it's amazing how fast sentiment will change in the stock market once the share price starts to move. So if don't overexpose yourself, of course. Like I look at my lesson 1 on risk. But if you haven't scaled in yet, but you're below your threshold, mine is maximum 10% in any one stock, then consider scaling, because now they have cash. The share price has come down, the market cap's come down. There's less risk now. They have cash, and the stock is cheaper than when they were originally listed. And they've developed the project further. So it's less risky now than it was when it started. Okay, but again, initial evaluation is all key. Man4949, great honest video, Justin. Thank you very much. That's it for today's diary. It looks a bit more buoyant, the stock market. I haven't seen what the American markets are looking like, but surely the fact that Meghan and Harry have a baby will be a bullish sign all round. Apart from your non-royalist. Thanks so much for this. And if, by all means, comment below, and I'll put those comments in the next video, and I catch up on stuff like that, and I'll answer any questions I can. Subscribe if you could, because that's I know if you're subscribing, then you value the video, and I'll keep doing more. And feel free, if you know someone who may find this video useful, please share it. Okay, thanks very much. Speak soon.